Well, I'm glad to see you all properly dressed for once. We don't often get that. Sure, it's the importance of the case which makes it appropriate. Anyway, Mr. Ferrets.
I'm grateful, my Lord. I appear with Miss Elizabeth Wilson for the appellants, Her Majesty's Revenue and Customs, and my learned friends Andrew Hitchmo, QC, and Miss Barbara Belgrano appear for the Respondent Club, London Club's management. My Lords, the short question in this case is how the provisions of Section 1110 of the Finance Act 1997, as amended, are to apply to what are called non-negs. And non-negs are essentially chips or vouchers with a face value in cash that are provided to casino customers by casinos as an incentive to come and play games in casinos, and which can be used in a game such as roulette in the same way as a traditional chip for the same amount of money. The only difference between a non-neg and a traditional chip is that a non-neg cannot be redeemed for cash at the counter, and it cannot be used as cash to purchase refreshments at the bar or food stall in the casino. Your Lordships actually have a picture, sometimes a picture is worth 1,000 words, of chips and non-negs at page 235 of the bundle. And if you're looking at that on the screen, it's only on my version, it's coloured in, and one can see an example cash chips, which have the name of the casino and a value on them, and then one sees below them examples of non-negs, which look identical apart from the words non-negotiable round the edge. If you also look at page 261, reference right, you'll see there a voucher of the kind we're told is handed out to the customers that the casinos wish to persuade to come and play at their casino. You'll see there it says enjoy free vouchers on us, and it says free gaming chips, and the value in this case £30. Period of validity there in each of the cases for a month. And then if one goes to the next page, one sees the back of that. There are terms and conditions. And if you look very carefully at the small print, it said that it says what you do with it. You present the voucher with photo ID at the cash desk. The voucher will be exchanged, the ticket to the same value for use in machines or electronic gaming terminals. This is and then gaming chips. Present this with voucher with that photo ID at the cash desk. It will be exchanged for non-neg gaming chips for the same value, available in different denominations to be used at any table game. And you're told that the non-negotiable chips are valid until lost and cannot be exchanged for wheel or cash chips. It doesn't actually say that they can't, in terms that they can't be exchanged for cash at the counter or used to pay for refreshments, but we accept that that's inherent in the word non-negotiable. And it's common ground that the chips here couldn't be used for those purposes. They can be used to play in games, but not to exchange for cash or to buy champagne. So that's what we're looking at. There are then various variations on the theme, because in some cases the non-neg is returnable as a stake, and in some cases it isn't. I think at the end of the day, neither we nor my learned friend believe that those differences are fundamental to the analysis of non-negs under the section. I think we both say that these various varieties may, in the end, make no difference, but we may come to the various varieties in due course. Now, this is the first case, as I'm sure your Lordships have picked up, in which the Supreme Court or the House of Lords before it has had to consider the provisions at issue. So the interpretation of this section is now is free from binding authority at this level. There are two apparent issues. The first is whether a negotiable chip, a non-neg, is a stake at all. The Court of Appeal said that it wasn't. And second, if it is a stake, how it is to be valued. I say two apparent issues because really those two issues in the end collapse into one, since the basis in the end of the claim, supported by the Court of Appeal and advanced by my learned friends before you today, that a non-neg is not a stake at all, is essentially a variation on the claim that a non-neg simply has no value. It's a valueless thing.
What was the position before the upper tribunal? Was it accepted there that it was a stake?
I actually didn't appear in front of the upper tribunal. The upper tribunal seems to have accepted without argument that it was a stake. There's no record in the decision. I'm slightly looking at my learned junior who did appear for the revenue as to whether that was actually in dispute before the upper tribunal, but I don't understand that it was. That way of putting it, I think, was a decision of the Court of Appeal. Whereas, if I recollect my learned friend's arguments there fairly, I don't think they put the argument that it wasn't a stake either. They like we did, concentrated on the valuation issue, assumed it was a stake, but was it nil value or what value was to be attributed for the purposes of the section. But
yes, I mean, the upper tribunal, I'm not clear to what extent the reasoning of the upper tribunal differed from that of the Court of Appeal, apart from this point.
Well, we say there are two differences. One is this point. The second is that when you come to the valuation issue, and I'll come to this later, but essentially the upper tribunal considered that in general, and leaving aside the facts of this particular case, because in the facts of this particular case, there was no evidence as to what the value, market exchange value of a non-neg would be. So we had to accept there was no evidence, and therefore it would. But the upper tribunal conceded, the reasoning of the upper tribunal suggests that in principle you do look at the market value, the exchange value. What would somebody be prepared to pay for the chip, the voucher that you see in front of you? Whereas the Court of Appeal, though it accepted the reasoning of the upper tribunal, also said, we think the value of a non-neg is simply zero, whatever the circumstances. So there's a certain inconsistency in the Court of Appeal decision, point we make in our written case. But the upper tribunal, when one analyses the key paragraph, I'll come to this, is favouring what we call the market exchange valuation approach.
When somebody gets one of these, do they have their name filled in?
I think that is right. You can see that on page 262 there is a little space.
And you have to produce your photo ID.
And you have to produce your photo ID.
I'm just wondering if they're transferable.
They may or may not be transferable.
If they're not, then that's the end of that.
Well, I'll come to it. When one looks at possible market value approach, it's not necessarily decisive to the a decisive argument against the idea that you look at the market value of the chips, that or the vouchers, that the vouchers may not be assignable, because it can, one could see in principle that you could talk sensibly about something having an exchange value, even though in the particular fact you're looking at, it can't be assigned. If one takes an example of a ticket for the Olympic Games or a vase in the British Museum, neither of those are things that can be put on the market, but one could imagine a way of valuing them if you had to for some taxation purpose to value what it was. You'd simply assume that it was something that could be put on the market. So the mere fact that something isn't, it can't be placed on a market because it is personal to the person to whom it was given, doesn't necessarily dispose of the argument the correct way of valuing a non-neg is to look at its exchange value. No, we say there are serious arguments, different arguments against the idea that the correct way of approaching the valuation exercise under Section 1110 is to look at the market value, essentially because it involves controversy and difficulty. One has to try and value these things, and that is a much more complicated way of dealing with valuation, particularly if you're dealing with a tax which is a self-assessed tax, and we say our approach, which is simply to look at the value staked in the game, is certain, easy to apply, and doesn't give rise to any issues about what the correct valuation should be. It's probably worth looking just quickly at the way in which the section was originally enacted and the way in which it's developed since enactment. The original version is at page 292. So there are two key sections, sections 10 and 11. One sees section 10. I managed to lose it on my laptop. Section 10.2 originally applied to listed games, which were listed out. And then section 11.2, going on to the next page. Let's do this one. That tells you that the amount of gaming duty is to be calculated in accordance by the following table. So you apply the rates originally there set out to the what is called the gross gaming yield. So it's simply a percentage of the gross gaming yield. And then what is the gross gaming yield? You go to subsection 8, which tells you that for the purposes of the section, the gross gaming yield in any accounting period is the aggregate of gaming receipts from those premises. We can forget about that for our purposes. And then critically B, where a provider of the premises is banker in relation to any dutiable gaming taking place on those premises in that period, the banker's profits for that period from that gaming. Dutiable gaming is defined in section 15, which we don't actually have there, but it simply refers back to gaming under section 10. And then bankers' profits are then defined in the key subsection 10. The reference to bankers' profits from any gaming is a reference to the amount, if any, by which the value specified in paragraph A below exceeds the value specified in paragraph B below, that is to say. And then we have the key phrase, for our purposes, A, the value in money or money's worth of the stake staked with the banker in any such gaming, and that part of the section has remained unaltered. And then B, which originally said the value in money or money's worth of the winnings paid by the banker to those taking part in such gaming, otherwise than on behalf of the provider of the premises. And then if we go on to page 298, we can see what the section, first of all, 295, we can see that the section 10, the long list of games, has now been replaced with a new subsection 2, which is casino games and equal chance gaming. Now, equal chance gaming is defined in the new section 15, which is at page 304, as essentially excluding games where there is a banker, and because we're all concerned with games where there is a banker, we don't need to worry about equal chance gaming. So it's casino games that matter. So that's the new section 10. And then if we go to section 11, one sees, first of all, 11.2 very briefly, that the rates of gaming duty have gone up. The percentages are a bit higher than they were. And then if one goes on to subsection 8 has remained unaltered, and subsection 10, paragraph A remains unaltered, but paragraph B, one now has a reference to the value of prizes provided by the banker. to those taking part in such gaming. So the word winnings has been replaced with prizes. And we are also then told, section 10A, a little bit further down, page 300, that when we're valuing prizes, you look at subsections 2 to 6A of section 20 of the Betting and Gaming Duties Act 1981, which apply with necessary modifications. And I'll look at that section when we come to look at the issue surrounding the prize limb of section 1110, which, as your lordships have probably spotted, is a subsidiary issue in this case, because it's agreed by both sides that one needs to make the approach to non-negs in both limbs A and B consistent, because it would be somewhat odd if they had one value under limb A and one value under limb B, given they are sometimes given as a prize. So it's agreed by both sides. They are sometimes given as a prize.
And how does that work? In what circumstances does that happen?
Well, I think the most obvious sense in which that happens is when the non-neg is simply returned as part of the stake. So you stake your non-neg chip, and you simply get that back. So you put your chip on red, and then you get that back.
Is that a prize?
I think that is a prize. Yes, and I think I may be corrected if I'm wrong, that sometimes non-negs are given as prizes in other circumstances as well. But maybe wrong. No, I'm told that's not right. But it's essentially
just
because of the stake. Yes, that's certainly the most typical.
But prizes includes all the usual winnings.
It's all the usual winnings, and of course, when you you get your stake back, and that's regarded as part of your winnings, part of your prizes, as well as the extra that you get.
Sorry to take up time on this. Is that really right? One would think that it's just your stake that's coming back to you.
It is. I think it's common ground that the way in which one applies this section is to regard the. If you want to take just an ordinary cash chip, is to take the cash chip that comes back to the player as a prize, and you deduct so that when you're adding up the amounts staked and the amounts paid out, you look at the chips that are returned as well.
All right, thank you.
Do you say that 10A is of assistance, is it?
Yes, I mean, the debate between ourselves and my learned friends is entirely about how one interprets section 10, paragraph A.
Yes, sorry, the 10 big A, is that relevant?
Oh, yes, 10 capital A.
Yes.
Yes, what that tells you now, as from 2007, is that when you're looking at limb B of subsection 10, which now talks about prizes rather than winnings as it used to, that tells you that when you're working out how to value a prize, you look at section 20 of the Betting and Gaming Duties Act, which I'll come to when I deal with the prize provisions.
It's not just about bingo.
It's not just about bingo, no. Those provisions were originally formulated to deal with bingo, and one of the effects of the changes made in 2007 were to import those provisions into the world of gaming, both gaming of the sort we're dealing with here, which is traditional gaming, but also remote gaming, the separate duty on remote gaming duty.
Right, well, we'll come to that.
But we'll come to that in due course.
So just before we do, you say it's accepted that this must be given, the prizes must be given the same meaning in both sets of provisions.
It's accepted. Yes. Well, it's accepted that the right valuation of a non-neg should be the same under both limb A and limb B. So if my learned friends are right that a non-neg should be regarded as having nil value under limb A, they accept and we accept that ought to mean that it has a nil value as a prize under limb B. Contrariwise, if we're right and the non-neg should be treated as having its face value for the purposes of subsection of paragraph A, we also accept that should mean, and one needs to then check to see whether one can make the provisions of Section 20 produce this result, but what it should mean is that the value of the non-neg as a prize should also be its face value. And we say if you look at Section 20, you can produce our result, and my learned friends say if you look at Section 20, you can make it produce their result. So one has to look at both. And though both sides differ in their approaches to both sections, both sides are unanimous in saying that the answer should be consistent, because otherwise you get a situation which would be somewhat absurd, which is that a non-neg would have one value as a prize and a different value as a...
But neither is
stake.
suggesting that 10A and Section 20 are a guide to the interpretation of value in subsection 10.
Well, we say you get to our result, the result we contend for, simply by analysing subsection 10A, and for what it's worth, the cases that have been decided on its own. And one, I suppose, could regard section 20 and as a cross-check to that approach, but the starting point is the language of paragraph A of section 10, and we don't directly say that you look at section 20 of the Betting and Gaming Duties Act as a guide to the interpretation of that, not least because paragraph A of subsection 10 pre-existed the coming into or the relevance of section 20 of the Betting and Gaming Duties Act, which when the Act was originally enacted had nothing to do with its provisions. It now does. And one ideally wants to run the two sections together and produce a result that's internally coherent, given that they now operate in parallel. But we wouldn't say that you can use the Betting and Gaming Duty provisions directly as an aid to interpretation, but one does want to try and make sure that the two run in harmony.
Whilst we're paused and looking at things generally, it would be very helpful to have a very basic explanation of the way in which gaming duty works. We all understand that income tax is taxing your income. If you're self-employed, you can make deductions from it, so it's your net take. But I've understood, I think, that casinos are taxed in relation to the game being played on the tables, but also in relation to the other business that's being done. What is the thrust of this? Is it a levy on the tables, or is it profit? Or we've seen that there are yield, profit, those sort of traditional profit type words. Can you help?
Yes, well, I think I've taken your lordships to the relevant provisions. Sections 10 and section 11 are the provisions that set out the duty.
But it's really your submission as to what this tax is after. Yes,
and our submission is that what this is after is what it says on the tin, as it were. It's the key word in section, the key phrase in section 8, subsection 8, is banker's profit. And you then see in subsection 10 the reference to staked with the banker. So what we say, this is a tax on the banker, and we say it's significant that it's a tax on the banker, which the banker is a creature of the game. The banker only has meaning in the particular games that we're talking about. Originally, just the listed games in the original version of subsection 10. Now, casino games more generally.
You're going to come to that as part of your case.
Yes,
it's really this question of whether it's trying to tax profit or whether it's making a levy.
It's taxing the bankers. It's probably not helpful to elaborate further and say what it's taxing is bankers' profits, right. And bankers' profits is a gaming concept. It comes from in a sense it's like the profits one makes in a game of Monopoly, which of course not typically paid for money, but one might talk about having made so many £100 or £1,000 in a game of Monopoly, and that is a sum which you derive because the game was played in a particular way and somebody ended up with so much paper money in their hands. And here it's taxing what is essentially a gaming concept, is how much money has been made by the banker in the game. I mean, it follows from Aspinall's, and I think is to some extent, common ground between myself and my learned friend, that you're not looking to tax real profits. We'll come to Aspinall's later, but what we say is the key feature of Aspinall's is that the Court of Appeal in that case rejected an attempt, as it happened, made by my learned friend in that case, to argue that when a chip was essentially given to a player, in effect heavily discounted, because the player was given a commission for playing. So that was economically the same as giving the player a discount on the value of the chip. So the casino got less money in for the chip than its face value, and it cost the player less than the face value to get the chip. But the conclusion of the Court of Appeal in that case, we say the key conclusion of the Court of Appeal in that case, was that you ignored all of that in analysing what was meant by bankers' profits. So what you were looking at was simply the profit in the game, not the economic profit, the amount of money the casino was really making. One looked at, that wasn't the right way of looking at it. What one looked at is the profit, is purely the gaming profit. So it's simply...
We'll come to Aspinall.
We'll come to Aspinall's later, but that's my lady asked me what is it that's being taxed, and Aspinall's is a critical part of understanding why we say that what is actually being taxed is this, one might say it was somewhat fictitious thing, but it's a gaming reality. It's the profit made by the banker, this word the statute uses, and it's a gaming concept, and what's taxed is the profits made in the game under the rules of the game, and not real profit in an accounting sense. Now, of course, that's where one of the reasons where we say the Court of Appeal went wrong, because the Court of Appeal says, well, this isn't real. This isn't real money received by the casino. We say that's just irrelevant, because one's looking at is the banker's profit, the profit made in the game under the rules of the game.
I mean, it's certainly clear from the definition, you don't bring in things like the cost of the premises, the cost of the tables, and all that sort of stuff.
No, I think that's common ground across the bench here. But we say go somewhat wider than that, and I think it's also common ground that Aspinall's, at least in this respect, was correctly decided. My learned friends are not trying to argue that that if you're looking at an ordinary cash chip that is given to a customer at a heavy discount or even free, that you treat it any differently from a cash chip that is genuinely purchased by the customer in the usual way by paying cash at the counter and getting chips back. Now, our starting point is really to observe that one could conceive of 3 different approaches, perhaps 4 different approaches, but one is definitely wrong, to valuing a non-neg under section 1110A. Now, the version put forward by my learned friends is to say that it simply has a 0 value, and the 0 value being justified solely on the basis that the casino is not prepared to exchange the non-neg for cash outside the game, either at the counter or to buy champagne at the bar. So that's one approach. Another approach is to look at what one might call the objective value of the outcome, perhaps more accurately described as the exchange value of the item, which what would somebody be prepared to pay for a non-neg in a putative market. And as I said earlier, that valuation approach doesn't, in principle, require that the non-neg is actually exchangeable for cash or assignable. There may be a non-assignability provision, but that, as I said earlier, doesn't mean that one couldn't conceptually give it a market value on the hypothetical basis that it could be exchanged for cash. It could be bought and sold as between players. So that's another approach, and we say that was the approach adopted by the upper tribunal, and to the extent that the upper tribunal's reasoning was adopted by the Court of Appeal, also by the Court of Appeal. And then there's finally our view that you simply look at the value for which the item is accepted as a stake in the game. So a non-neg chip with £50 written on it, which is accepted in the game as a stake of £50 and entitled to all the winnings, possibility of winnings that an ordinary cash chip of £50 would have. It then is treated identically to a cash chip of £50 and is a £50 stake and adds £50 to the total that one has to add up under Lim A.
May I just ask about the first of those?
Yes.
Is it an element of that approach, at least as you understand it, that one also looks at the value which the punter is putting at risk? Does one take into account the potential downside to the punter?
Yes. Now one has to be a bit careful here. Certainly, my learned friends, when they put forward their argument for the zero, what we call the zero value, the nil value approach, one of their key arguments when they do that is to say, well, the player actually isn't putting anything at risk when he plays a non-neg. And we say that submission has a certain number of difficulties. One is that you could equally say the same about a cash chip that is given to the player, just given to the player. And I don't think it's controversial between myself and my learned friend, but if it follows, we say from Aspinall's, that if a discounted chip, a 50% discount, 70% discount, is to be treated as having its face value, the same must apply to a chip which is given at 100% discount, i.e. simply given to the player. So that's the first problem. The second problem is really a problem almost of common sense, and that is that, well, for a start, a non-neg, I'll show you the evidence on this in a moment, but a non-neg is given to players as an incentive to come and play at casinos. It therefore is presumably something which players value, otherwise there would be no point in giving to them. My learned friends at one point said it's nothing but a worthless bit of paper, but if it was nothing but a worthless bit of paper, it presumably had no effect on anyone's behaviour. It is in fact a valuable thing. It has a value, because if you dropped it and lost it, if it fell down a drain, you would lose the chance to put your £50 chip on a game of roulette and win real cash chips, which you can then exchange for cash and go out and spend anywhere. And it's a point we make in our written case, but is a good one, we say, that it sort of illustrates the point, that if you have, take the example where you have two of these £30 vouchers and you have two of chips and you put one on red and one on black in a typical game of roulette. Now you're almost certain, of course almost is important because the casino has its 1 or 2%, you're almost certain to get the ball almost certainly land on either red or black unless you're really unlucky. And in that case you will get your non-neg, typically get your non-neg stake back, but you will also get £30 back in cash chips. And if you play that sort of cautious strategy, spreading your bets with your non-negs, in the end you will end up with a considerable number of cash chips, unless you're very unlucky if you play cautiously. You may not end up quite with the face value of the vouchers if you play cautiously, because the casino will always take its cut, but you will end up with something perhaps not far south of it. So the proposition that a non-neg has no value and that you don't lose anything if you put your non-neg down and you're very unlucky and the ball lands on the zero, neither red nor black, and you don't win anything. The idea that in that situation you haven't really lost anything, we say is highly artificial. Most people standing around the table would say, we say, that in that situation the player has lost something. I mean, they've lost something that they were given. In one sense, they walk out of the casino, they're in the fortunate position of walking out with the casino with as much money in their bank account as they walked into the casino with, which is not
I mean, I think I'm making an obvious point.
Right. Yes, it has a
Worth something to someone. I mean,
yes.
You know, otherwise we wouldn't be talking about it, but that doesn't
Absolutely
answer the question we have to deal with.
Well, we say, well,
But if it did, we wouldn't all be here, so.
we say it's part of the answer, and we say it's significant that my learned friends, when they argue for the nil value, they say it's nil value, have to, or feel the need to rely upon the proposition that the non-neg is in fact, they say, worthless, and nothing is put at risk. And we say that is actually not a common sense view of what is really going on. And we say it cuts against their argument.
Do we have somewhere a table which shows the difference in computational terms of the two positions? I mean, I haven't quite got my head around how it affects the arithmetic of taking the non-neg into account in the computation, in your tax computation. We don't have somewhere the comparative simplified form.
We don't. It's not. It's not, we say, particularly difficult. If you have a non-neg which has £50 on it, and is accepted in the game as if it were a stake of £50. On our view, that means that there's a £50 element comes in under lim A. So when you're totalling up the banker's profits, you add £50 by virtue of that stake having been placed. And my learned friends say you add nothing at that point because they say a non-neg is not a...
But on the other side of the balance, it may or may not go out again. Is that the point?
It may or may not go out, but casinos being what they are, in the end, the number of chips sort of collected in exceeds the number of chips that are paid out, and that's how the casino in the end makes its money. And it's that on the end on which
it seems
the
to
casino
amount to very large sums of money potentially.
Yes.
Why we're no doubt here.
Yes, I think the amount of money at issue in this case is, I can't remember the figure isn't at the top of my head, but it's well over £1 million. Somebody behind me will have it. And then there are following. So it all adds up.
It is that simple point that all the chips you're putting in go into the one side of the balance, but only some of those go out on the other side.
That's right. I mean, casinos being what they are, the more chips come in than are paid out.
Okay.
That's how they make their money.
Right, thank you.
Yes.
And can I just check, are non-negs sort of time limited, or can you just sort of use them year in, year out if you haven't lost them?
The voucher that we saw, the voucher actually had which was on page 260, I think. That actually I noticed you had to spend that voucher within a particular period of time. Whether you then have to use the chips within a period of time, I don't know. And the chips that we see at page 235 don't, as far as I can see, have a date stamped on them, but it may be that they have to be used within a particular period. I don't know.
But your argument doesn't depend on details of that.
No,
You say this has got a value.
We say it's got a value.
Whatever its terms are, it's got a value.
Yes.
And that should be brought into account.
And that should be brought into account, indeed. Yes. And certainly it cuts against my learned friend's case that that they should be treated as nil as nil value.
I mean, I'll tell you the reason for my question, my interest in that is that rationally, since you can't spend the non-neg as cash or exchange it for cash, you would go on playing with it until you lose it. So I understand that if you play it in the first game and it comes back to you, that counts as winnings. But then you would play it in the next game, and eventually you will lose it.
Presumably, that must be right.
But the duty is on profits in certain periods of time. So it may you may have been given the non-neg to play, and indeed played it within the time period in which a calculation of profits is made, but you lose it after that time period has expired.
That must be right. Yes.
Okay. Right. I
mean, one assumes it in the round. probably doesn't make much difference. But yes, I mean, that must be right. Yeah. Now, I said those are sort of three approaches that one could take: the nil value, the exchange value, and the value accepted as a stake. And I said there might be a fourth, and this is really, I put this is got a not really at issue label attached to it because nobody's putting it forward. A final possible value might be the amount paid by the player or received by the casino for the item stake. That's the sort of real value received by the casino's approach. And as I observed earlier, it's common ground and follows from Aspinall's that isn't the correct approach, and that you treat certainly an ordinary cash chip given to the player by the casino at a significant discount of its face value, or even 100% discount of its face value, as if it were a stake at its face value. So ignore the fact that the casino has not received any money, or has received rather less money for the chip than its face value dictates. If you're talking about a cash chip, my learned friends accept that. So that approach it's common ground that final approach, that you look at sort of economic receipts by the casino, is not the correct approach. Now, if one's dealing with ordinary cash chips that are purchased by or given to the player, all three approaches produce the same answer. And Aspinall's was, of course, a case where one was dealing with ordinary cash chips. So it's somewhat unsurprising that it doesn't elucidate what the choice between the three remaining alternatives approaches is. So if you're thinking about an ordinary cash chip, that is obviously accepted. If it's a chip for £100, that's obviously accepted in the game as a stake of £100. So on our approach, it's £100. The exchange value of the chip is only going to be £100, the market value, because nobody in their right mind would offer to pay more than £100 for it, and nobody in their right mind would accept less than £100 for it, because you could go to the casino and get it cashed or buy champagne with it. And nobody contends that it has a zero value. Now, however, in the case of a non-neg, the difference in approach matters precisely because the casino is not prepared to exchange it to the counter. And the counter of value, one might say, is nil. The casino simply won't exchange it for cash or champagne. However, it's played in the game and treated for the purposes of calculating winnings as a stake of £100 if it's got £100 marked on it. And as I pointed out earlier, if one thinks about its exchange value, that is likely, although it would have to be a matter of evidence in most cases, but one would apply a bit of common sense, to be worth something perhaps close to £100, given that if you deploy non-neg chips carefully in a cautious betting strategy, you're likely to get some approximation back of what you have staked, unless you are somewhat unlucky. So one would assume that if a customer did not want their non-neg and went up to the person next to them and said, "Psst, how much would you be prepared to pay for that?" The answer wouldn't be nothing at all. If it was a £100 chip, it would be somewhere a bit south of £100. Would be the value you'd expect. So those, in the case we're looking at, the three different approaches produce different answers. And this is not the case that was considered in Aspinall's or indeed any of the previous cases. Now, in analysing the non-neg situation, we say it's helpful to start with two cases which are common ground as between the parties today and indeed the Court of Appeal. The first, as I said above, is the discounted or free, 100% discount, cash chip. Now, I said we'd have a quick look at Aspinall's. Now, perhaps now it's time to have a look at it in the Court of Appeal. at page 335 of the bundle. There's a Court of Appeals judgment in Aspinall's, which is short, and in fact even shorter, because it's common ground that the discussion after about paragraph 12 isn't really relevant to this case. So it's really only the first 12 paragraphs of the Court of Appeals judgment which is relevant. And we say the key passage is really paragraph 8 on P335. Now, one has to remember here that the court is dealing with cash chips. So the court says the value in money or money's worth of the stake staked is the face value of the chip. Staking the chip is the same as staking money, and the value in money and the chip is its face value. It refers to Lipkin Gorman. That all makes sense in the context of cash chips. The stake is the amount risk in connection with the game. It is the value of that stake which is put at risk in the game. And then finally, the Lord Justice Moses says the value put at risk in the game is not altered by any reference to any commission that the player receives under the cash chip agreement. So that's the point at which the Court of Appeal says you simply ignore the fact that in this case the commission gave a commission, which is a form of retrospective discount, to the player for buying and wagering cash chips. You just ignore that. You look at, and we say what that indicates is that what you're really looking at is the value staked in the game.
These are chips which are fully exchangeable.
These are exchangeable chips, yes. No, non-negs were not in front of the court in Aspinall. He's talking about ordinary cash exchange chips.
So even if you buy them at a discount, they've got their face.
They've got their face value, and my learned friends accept that that's a correct conclusion from Aspinall's in relation to a chip that is given at a discount, or ultimately 100% discount given free to the player. You still treat it as when it's staked, put down in the game, as a stake for the face value of the chip. Now, bearing that in mind, one then looks at, we say instructive to look at my learned friend's written case, which is at page 74 of the, and picking it up from page 74 of the bundle. Now, what my learned friends are doing there at paragraph 32, they analyse the position in relation to cash chips, and then at paragraph 33 they say the analysis in relation to non-negs is fundamentally different. Now, I invite you to read the next few paragraphs, just holding in your minds the point that my learned friends accept that a cash chip which is given to the player free and then staked is to be treated as a stake for its face value. So then, bearing that in mind, then look and see what it said at paragraph 34. So first of all, it said the player is given non-negs by the club. Now, if one compares that to the freely given, to the given cash chip, there's no distinction there. That's equally true of a given cash chip. The player does not deposit anything with the club in exchange for the non-neg. Well, that's equally true of a given cash chip. A contract is made under which the player agrees non-negs can only be used to place a bet at certain gaming tables and cannot be encashed or used to pay for goods and services. Well, that is a difference. The question is whether that's a difference that's legally decisive, but it is a difference. The club agrees that the player can participate in a game without having to put value at risk, i.e. without having to stake a stake. Now, we say about that is for reasons I put forward earlier, that is factually incorrect, because the fact that the non-neg is given doesn't mean that value isn't put at risk. When it's staked, it is perfectly meaningful to say if the player is very unlucky and the ball hits the zero, and the player loses his non-neg, that the player has lost something of value. The fact he may have been given it doesn't mean he hasn't lost something of value. And the conclusion that which is suggested here without having to stake a stake is effectively asserting what has to be proved, and namely that it isn't a stake. So that's paragraph 34. And what bears in mind here, I said I'd just take you briefly to the evidence on this, but the club's own witness statement, which is at page 232 of the bundle, paragraph 37, it's there said that the chip is a marketing device to get the customer to come to a club casino, which we suggest, as I said earlier, it rather implies that it's worth something. And the maker of the statement goes on to say that it gives a chance of winning prizes, which suggests that it's worth something. And indeed, if one looks at what the first tier tribunal, the fact-finding tribunal in this case, said, one goes to page 144 of the bundle, at paragraph 27. Judge Sinfield said, and we agree with him on this, he said that the fact that the player does not risk losing any money does not mean that the non-neg does not have any value in money when it's used as a stake in a casino game.
So where's that?
Sorry, that's paragraph 27 of the first tier tribunal judgment. That's at page 144 of the bundle.
Yes.
So this is really to sort of hammer home my point that the non-neg has, in any common sense approach, a value. It's not, as my learned friends assert, a valueless thing.
What is it? I mean, is that a finding of fact, or what do we make of that in paragraph 27?
Well,
So I thought the first tier had decided.
They do decide. Of course, they decide facts.
Yeah.
I mean, to be fair, the facts. What the facts are is the use of the value of the non-neg and what it is used for, and how it is then treated in the game. Those are facts. Whether one then deduces from those facts whether or not the non-neg has a value it's a subsidiary. It's not a question of primary fact. It's a question of the deduction one draws from that. I think my learned friend at some point accused us or make the point that we didn't cross-examine their witness on his claim that the non-neg had no value. And our answer to that is in short, that was what that witness said about the primary facts was not a matter of dispute. So there's no point in cross-examining him on it. And his conclusion, his deduction from that there was no value of a non-neg was effectively an inference which he was entitled to draw, but we were entitled to draw different inferences, and there wasn't much point in cross-examining him on it. The first case is making an inference that there is in fact value, which we would support, but it must be open to a higher court to draw a different inference from what there are the common ground sort of basic matters of primary fact.
But I thought that we're invited to approach this appeal on the footing that the first tier tribunal found that the exchange value was nil because no evidence was led, whereas paragraph 27 that you've shown us seems to be the first tier tribunal saying it's not nil.
Well, it's not. I think there are two different problems. What was not shown, wasn't shown precisely how much a player would be prepared to sell a non-neg for to another player. There was no evidence about that.
Were we to come to the conclusion that that middle ground is the correct way to approach it, what in your submission should we do?
If that were your Lordship's conclusions, we would accept that in this particular case, because we have produced no evidence on that point, we would lose. But it would then be open to the Revenue and Customs Commissioners in future cases to adduce evidence that non-negs had a value, and one would then have arguments in first-tier tribunals, potentially, as to whether the valuation was put on it, and presumably one would have experts performing mathematical calculations based on assumptions as to odds in particular games, as to what an exchange value might be. I mean, as I postulated, we would say it's the value of a £100 non-neg chip on an open market basis is probably south of £100, but may not be that far south of £100. But precisely whether it's £90 or £80 or £85, one would have to establish in evidence, and one would have to do the calculations. We say this is not an inviting prospect. I mean, this one it's not an approach.
Obviously, within the casino, if I've got a non-neg and someone else is wanting to bet, I can probably persuade that other person to give me a bit of cash for it, sort of probably 50% or something.
Yes.
But I don't know what evidence you have. But I mean, we're asked to approach this case rather artificially on the basis that there is no value, no market value for the non-neg.
Yes, I mean, market.
So,
the question whether it has a value. Value, of course, can mean different things. It can mean market value.
anyway, I think probably we better move on.
Yeah, I think
we're not bound. I think it's not a sort of finding of fact which binds us in any sense. So
No.
we better get on with
As,
it.
as I'd understood your case, it's that it can have a value, but you haven't established that it does here.
Yes, that's right.
So you want us to look at the principle more broadly?
Well, we would have to be looking at exactly. I mean, this is at this level, one's looking at the principle rather than the facts of the particular case. And the reason, I mean, I was referring to paragraph 27 of the first-tier tribunal's decision, is simply to make the point that when my learned friends say, as they do say, and it's part of their case, that a justification for treating a non-neg as having a nil value is that, and I think they use this phrase expressly, a worthless piece of paper, that is not actually a true characterization of what there is. Now, it's not necessarily a claim about the market value, it's simply more generic than that, because things can be valuable to somebody without having a market value. But it is something which is valuable to the person who holds it. It's valuable to the player in the sense that, as I said, if it fell down a drain, the player would think, oh dear, I've lost something, rather than if it was simply a worthless piece of paper, saying, oh well, and just move on. So in that sort of most basic sense of value, is it something that a player values? We say it has a value, and that's what we say the first-tier tribunal is finding here.
But the relevant value is the value which the parties place on it for the purposes of the game. Is that right?
We say the value, exactly. We say the value rather than asking what the market value might be, which we say leads you down a rabbit hole of expert evidence, we say that the correct approach is simply to look at the way it is treated in the game. That's right. And the relevance of the point that the non-neg has some value to the person holding it is, as it were, a sort of comfort blanket against what might otherwise be a feeling that that's all a bit odd, because aren't you taxing something which doesn't really have a value? And that's really as far as the point goes. And as I said, my learned friends hook their case on the proposition that the non-neg has no value at all, which is right, why it's right to treat it as nil. And we say that just as a matter almost of common sense is just not right. So that, and if one then looks at sort of paragraph 35 of their, going back to their written case at 74, at page 75, they say that when a player plays with a non-neg, he is not gambling with money, or indeed the equivalent of money. Non-negs are not mere counters or symbols. Well, that's right, but we say that doesn't legally make any difference, because they are, when they are placed as stakes in the game, they are treated as stakes face value of the chip. And as for they then, 36, the club doesn't appropriate any cash or value when a player plays a game. Well, the same is equally true of a freely given cash chip, that the club doesn't appropriate any cash there either. So if one has in mind the point that a cash chip given to the player is to be treated, and my learned friends accept that, as a stake of the face value, of its face value when it is played, then it's quite hard to see then what the real difference is between that and a non-neg, other than the point that a non-neg is not is outside the game, not exchangeable for cash or champagne at the bar. So that's one example which is, say, tests my learned friend's argument. The second argument, which is an argument I put to the Court of Appeal, the Court of Appeal didn't think it got anywhere very much, but I advance it undaunted because we think it's helpful, is the diamond necklace example, which is the diamond necklace which is accepted by the casino as a stake. Now, the casino, the Court of Appeal held at paragraph 39 of its judgment that this example, we didn't think much of the example, but what it did accept was that the example helped explain the reference to money's worth in section 1110A, in that it ensured that a non-money item, a diamond necklace, that could be converted into money, counted as a stake. Didn't otherwise think the example was very helpful. But we say it is, and in my learned friend's discussion of the case from paragraph 50 on in their written submission, helps show why the example is in fact helpful. And my learned friends deal with our diamond, as I said, from paragraph 50, which is page 78 of the bundle. And we say rather significantly at paragraph 55, they accept that if a casino made a bad bargain, because in fact what they thought was a diamond necklace was made of paste, was in fact a diamond was made of paste and not diamonds at all, the casino would not be able to revisit the value that had been agreed with the player. So what one has in that situation is a casino accepts an item which is in fact worthless. Let's just assume for the sake of argument, worth nothing at all, zero value. So it accepts that item and it accepts it in the game as an item worth, say, £1,000. No idea whether a diamond necklace was worth probably rather more than £1,000, but let's say £1,000. And my learned friends accept that in that situation, even though the paste necklace is in fact completely worthless, it should be treated as a stake of £1,000 and enter it into the bank calculation of bankers' profits accordingly as £1,000. Now, we say that's a significant concession because it's actually quite hard to see really what the differences between, relevant differences between that example and a non-neg.
Well, they explain what they say is the difference in paragraphs 52 and 53. It depends on the contract between the parties.
Quite, but here in a non-neg one has in a sense a contract, perhaps used loosely, it may not, doesn't really matter whether it's a binding contract or not. You have an arrangement with a non-neg between the player and the casino, and the casino agrees to accept what is in fact a worthless piece of, simply a piece of paper, as if it were £30 or for the purposes of the game. So the casino is agreeing to treat something which is intrinsically worthless, as simply a piece of paper, as something of value in the game. And that, we say, is materially identical to the agreement the casino reaches in relation to the paste necklace, where the casino, for whatever reason, agrees to treat something which is in fact worthless, a piece of paste, as a valuable stake in the game. And we fail to see what the relevant difference is. In both cases, there's an arrangement agreement between the player. And in both cases, you've got the casino agreeing to treat something which is, one might say, is objectively worth nothing, but to treat it as, for the purposes of the game, as a valuable stake.
And I suppose you would say, I mean, the agreement that's referred to here doesn't extend to actually treating the necklace as cash. So if the person took back the necklace, having played the game and won, and then went and tried to pay for champagne or something with the necklace, and the scales had fallen from the casino's eyes, and they realised that actually it was worth nothing, they wouldn't have to accept it as worth anything.
That's precisely the point I was going to make, yes. Yes, absolutely, yes. So we really fail to see what the relevant difference is there. So we said this is actually quite a revealing example, which tests my learned friend's case, we say, to destruction. Now, where those two examples, the paste necklace, which is treated as if it were worth something, and I suppose maybe various reasons why, because a casino might genuinely be in doubt as to what the value is, or it might just agree because it wants to be kind to a customer who's an established customer of the casino, to turn a blind eye to the fact it isn't worth it. And none of that matters. The reasons why the casino treats it in a particular way can't matter. Where those examples, the paste necklace example and the freely given cash chip example get us, we say can be summarised in two propositions. And the first is that once you accept, as the Court of Appeal effectively did in Aspinall's, by disregarding all commission or discounts given by a casino on a cash chip, and my learned friends do today, once you accept that a cash chip given away by the casino, but then accepted in the game as a stake at its face value, is to be treated as a stake staked, it becomes hard to see why the same is not true of a non-neg. In both cases, the casino receives nothing and the player pays nothing. In neither case would you say that the casino has received a sum that would enter on a conventional set of accounts, which is a point made by the Court of Appeal. And in both cases, if the player loses the stake, he's no worse off than when he started. He walks out, he's in the happy position of walking out, happy and probably somewhat unusual position of walking out of the casino with as much in his bank account as when he went in. So that's the first conclusion, proposition one can draw from these examples. The second is that once you accept that a non-money item, my diamond necklace, is to be valued by reference to an agreement or understanding between the casino and the player as to the value it is to be given as a stake, then you necessarily accept that an item that may, such as a voucher or non-neg chip, that may have no intrinsic value, is to be counted as a stake of X pounds if the casino agrees to attribute a value of X pounds to it as a stake in the game. And what is source for the valueless paste necklace allowed to count as a stake of £1,000 is source for the piece of paper, a non-neg voucher, which is also allowed to count as a stake of £1,000. In both cases, the true value under section 1110A is £1,000.
So the banker's profits are to be calculated.
Banker's profits are up by £1,000 in each case.
You have to calculate them, you say, by reference to whatever value the casino has agreed to place upon the chip.
Yes, and agreed to and does accept.
Yeah.
Yeah, because the amount only comes in when it is actually accepted. Of course, I mean the mere agreement wouldn't itself achieve any change in the taxable, chargeable amount. It's the acceptance of the actual acceptance of the item as a stake. And just as in the case of the paste necklace, it's irrelevant. To pick up my Lord Sales point, just as it's irrelevant that the casino wouldn't be prepared to exchange a paste necklace for £1,000 in cash at the counter or £1,000 worth of champagne at the bar, nor is it relevant that the casino wouldn't exchange a non-neg for £1,000 at the counter or £1,000 champagne at the bar. So standing back, we say what this all tells you is that my learned friend's approach and the Court of Appeal's approach, which is to support the nil value approach to the valuation of a non-neg, is essentially arbitrary they don't apply it, and the Court of Appeal, given that was bound by Aspinall's, couldn't apply it to a freely given cash chip, despite the fact that such a chip is an incentive or promotion and doesn't involve any receipt of value by the casino. Nor do they apply it to a diamond necklace, even though the agreed stake value of the necklace may greatly exceed the value of that necklace, and indeed the necklace may not represent any real value acquired by the casino. And so we therefore see no intellectual justification at all for applying the nil value approach only to non-neg vouchers and not to these other items.
If you give away a cash chip, can you set it off anywhere else in your accounts as a casino?
You certainly can't. If you give away a cash chip and then it is then staked, it will enter in as banker's profit, so you will pay tax on it. Whether, I'm sort of looking behind me, whether for corporation tax or anything else. Well, people behind me are not experts in corporation tax. So
But it's a question of the balance of the scheme. If it costs you, the casino, to give it, then one would expect, looking at ordinary taxes, that you'd be allowed to deduct that from something.
Which is a liability, because you may have to perform a service for the voucher.
You may. I mean, I'm afraid I simply don't. Not any gaming. No. I'm afraid I simply don't know whether there's any other tax that casinos pay where it might be allowable as an expenditure to reduce that. I'm afraid I simply don't know. And
But the purpose
I'm
of...
looking behind me for instructions, but I'm not sure that they...
And the follow-up question would be whether the other items were treated differently in that respect.
Yeah. I'm having note that for corporation tax, it might be. I'm told that it would be allowable as an item of expenditure. I'm afraid I'm simply repeating my instructions on that.
But the statutory question that we have is a blinkered question. We're not to look at the company's accounts.
Indeed.
We are to ask simply the two statutory questions.
Indeed. Indeed. And we say that the blinkers are the blinkers of the game. And once you're satisfied, it's part of the banker's profits. That's it.
I'm slightly surprised at the suggestion you could bring it in as part of your income and expenditure account for corporation tax purposes. But I don't think we need to go down that route, because I think this is obviously a self-contained tax or levy or whatever it is.
Yes.
We have to deal with it on its own terms.
Well, I have to confess that it's not a matter to which I have given any.
That's entirely
I'm simply repeating my
entirely understood. It's simply that to understand one bit of a picture, it's quite helpful sometimes to look at all of it.
I mean, what the note that passed out to me was a fair point, is that it might well be regarded as a marketing expenditure.
Yes, that's what I thought.
Marketing.
Yeah. I'm assuming that what I'm told behind me is correct, but I'm afraid I'm not personally.
Those are the tax accounts, but the company accounts showed as a liability.
Yeah.
Yes. Sorry, just to pursue that one step further. The gaming taxes that you pay are in addition to the ordinary corporation tax you pay.
Yes, indeed. So a casino has to, its gaming duty is on top of the corporation tax they would otherwise have to pay. Well, they otherwise do have to pay. Yeah. This is an additional tax.
Is that an allowable? I appreciate we're going down corporation tax, but is that an allowable item when calculating the profits for corporation tax? Do you know? Perhaps that's a question too far.
No, I'm told no. But
right.
Again, I'm afraid that's not a matter I've given any thought to, so I simply pass it on without warranty.
Just does one can see the Court of Appeal's point that it does seem rather odd to calculate bankers' profits by reference to essentially free shots which the casino has given to certain favoured punters.
One can see that, but our answer to that is partly that pass was sold in Aspinall's, because Aspinall's tells you, and as it's common ground between the parties, that when Aspinall says this is right, that when you give a cash chip to a consumer, and it's then staked, the face value of that chip goes into the calculation of banker's profits, even though the casino has received either nothing at all or much less than the face value for that chip. That is the heart of the reason why my learned friend lost the case in Aspinall's, and my learned friend doesn't dispute that conclusion. So once one accepts that, it follows, and also my slightly humorous, but nonetheless revealing example of the diamond necklace illustrates the same point, that there are circumstances where a casino accepts something as a stake, even though it's not worth anything like the value given to it as a stake, and it's common ground that in those circumstances too, the element that goes into bankers' profits is the value that it was given as a stake and not its real value. So, though it may seem a bit counterintuitive if one's approaching this completely cold, if one looks at the examples that I put forward, and particularly the cash chip example from Aspinall's, it is in fact, it really sort of just follows from the way the scheme works. And ultimately, this is a tax, as I said on opening, it's a tax on a gaming concept. It's a tax on bankers' profits, the profits as viewed from the perspective of the game, as my Lady Arden said, as one has applied to a certain amount of blinkers. It is simply a gaming concept. Yes, I'm also, sorry, I remind, while we're on the topic of possible deductions on corporation tax, I'm reminded also that one might, that you may allow a tax deduction for cash winnings from the free, well, actually this is a point about the gaming duty, isn't it? The gaming duty also allows if the free play is successful and the player walks out with a whole lot more money than they came in with, then that's all taken off the banker's profits. So
Well, those would be
they're allowed a deduction for when the casino ends up losing money as a result of this, in the sense that it gives a chip away, it gives a non-neg away, and the non-neg is then very successfully played, and a £30 non-neg wins £200. The £200 is then taken off the banker's profit. Now, what we say about our approach, the value in the game approach, has the enormous merits in any tax of consistency, coherence, and ease of application. You don't have to worry about the terms on which the casino might be prepared to exchange the item staked for cash or champagne. You don't worry about whether the item can be transferred. You don't worry about what its market value might be, whether my Lord Conworth is right that a £100 chip might realistically only be exchangeable for £50 at the bar, or whether some expert in probability will show that actually it might be worth more. You don't have to worry about any of that. You just look at the value that the item was given as a stake in the game, and any item, in order to be played, it has to be given a value as a stake in the game. It's a stage that has logically to be gone through, and you will come up with a figure in pounds and pence, which gives you, you simply enter straight into the calculation of bankers' profits. And it's a point I've already made, but we say that it's also linguistically, because the sections talk about bankers' profits, staked with the banker, it's nothing odd about using game-related concepts of looking at the approach in, looking at the profits in the game, and by reference to the rules of the game, in order to define the amount chargeable to tax. And it also, I think it's a point I didn't make when looking at the words of the section, but it's another point one can pick up. If one looks at section 1110B, the prizes winnings provision, there's the drafter took care at the end to add the words otherwise on behalf of the provider of the premises. This is at page 300 of the bundle. And the effect of that provision is that a prize awarded by the banker to the casino is not to be counted as a prize. And that provision is necessary only precisely because the section is based on a distinction between the banker, an entity that exists and has meaning only in a game, and the casino. So that you have to leave out of account prizes won by the casino in calculating prizes and what was once winnings and now prizes. And it's the banker's profits, not the casino's profits, that are chargeable to tax.
Sorry, can you explain and give an example of what would be provided by the provider of the premises and therefore excluded? I mean, what sort of...
How I read that was that you might have a situation in which one of the players round the table was in fact was in fact the casino, because it's a prize won on behalf of the provider of the premises, so somebody who might actually be the casino. And in that situation, you ignore as prizes and winnings the amount that is actually given to the casino. I know.
Well, you're
That's
playing
how I
against the
interpret it.
house.
Well, yes, the bank, indeed, yes. I mean, part of my difficulty in this is I have to confess, 100% familiar with all the rules of the different types of games that there are. The one game I do feel fairly confident I understand is roulette, but it may be that in some of the other games that are played, it may be that you do get a player that plays on behalf of the house, as it were, as well as having a banker.
In the sense that they're playing against
the other
players in order to make the game work,
that may be right.
And they may win.
Yes, I'm simply not familiar enough with the various other games.
Nor am I stressed, but the words punto banco suggests that you're playing against the bank.
That may be right, yes. It's very hard to see what else the words otherwise on behalf of the provider of the premises are getting at.
May I just ask you this, please? The upper tribunal appeared to attach considerable weight to the fact that the gambling with a cash chip is not gambling with the chip itself, but in substance gambling with the money represented by the chip. And in the case of a non-neg, there is no money deposited, which is ever, it is, as I put to you a moment ago, essentially a free shot.
Yes.
Which is the Lipkin-Gorman case.
It is the Lipkin-Gorman case, and what the Lipkin-Gorman case does tell us is that, at least for the purposes of tracing, which is what that case is ultimately about, you treat you don't treat the.
You're not buying chips.
You're not buying chips. Yes,
the
that's
chip
not a
simply
transaction
represents the
consideration.
cash stake that you're putting at risk.
Absolutely. So the chip can, for those purposes, simply be regarded as money. Now, of course, in Aspinall's, one was talking about cash chips, so one didn't need to, it was simply not at issue how one deals with a chip that was not sort of purchased in that way. Here we're dealing with something different.
Well, it's a very different concept. It may be said to be a very different concept because your submissions, as I understand you, are focused on the chip having a value, whereas the Lipkin-Gorman approach is to look more at the stake that you're putting at risk, which is simply represented for convenience by the...
Yes. I mean, that's why we say it's relevant to compare the position of a non-neg where the player has never put any money into the casino's hands. There's no pile of cash at the counter that represents the chip. It's relevant to compare that first with the given away chip, where there's again no pile of cash at the counter. Now, I suppose how that would be analysed in Lipkin-Gorman terms, if one was worrying about tracing, is fortunately a question I don't think we have to grapple with. But the key point, what we do have to grapple with, is what that means under Section 1110. And the point we make about that is it's it's very hard to see a difference of principle between the cash chip that is given or the diamond necklace, in fact worth nothing, but is recognised as having a stake for £1,000 for whatever reason by the casino. Neither of those cases has one got a deposit of value with at the counter.
Well,
In both cases, my learned friends accept that that's a case where the item should be treated for bankers' profits purposes as being as having the value that it was given in the game.
And that's the step you say that was taken in Aspinall, and which is accepted to be correct.
Yeah.
And presumably one could say about Lipkin Gorman, that's concerned with tracing real value in the real world.
Indeed.
Whereas, as I'm understanding, the essence of your case is the statutory regime, you say, deliberately sets up, I think it was my lady's phrase, a blinkered worldview where you're just looking at the game itself.
Indeed.
In fact, I mean, I was just trying to think how tracing might work with non-negs. I suppose you could get into quite complicated situations, perhaps not take up time on it.
I mean, in Aspinalls, in both the Upper Tribunal in Aspinalls and in the Court of Appeal in Aspinalls, one can see why Lipkin Gorman, it offered a sort of a neat shortcut, because you could say, actually, the chip was simply to be regarded as money. That's not a shortcut available to us here, because the non-neg isn't the fruit of or represent money deposited in the till. The critical question is whether that difference actually matters, or whether the fact that you can't use the Lipkin Gorman shortcut actually affects the analysis, and we say it doesn't. And the reason why we say it doesn't is precisely because you compare it with the freely given cash chip example or the pacemakers example.
I mean, just on that, I mean, this was the thought that was going through my mind. I mean, if the non-neg is essentially a chip given you by the casino, it's difficult to see how that could feature in a tracing analysis, because it's not value that's come from the solicitor's firm where you're employed and whose money you stole. It's come from a different source.
That may well be right. I mean, overnight I did sort of wonder about what the Lipkin Gorman analysis of such a chip would be, and in the end, slightly lazily concluded I didn't need to worry too much about it. The answer was rather difficult to work out without all the authorities that one needs when dealing with that sort of question.
I suppose it gets more complicated if you've used the solicitor's firm's money to go in and start gambling, and then people start thinking, oh, we bet this looks like a good gambler, and start giving non-negs, and you gamble with that, and sometimes you win with those, right?
Yes, I mean,
it becomes more complicated then.
Your Lordship may be anticipating a case that at some point will arrive in the Supreme Court on that point, but unfortunately, I think my conclusion after worrying about it overnight was that we...
May I just put to you one other point? In subsection 10A, it's talking about the banker's profits from any gaming having regard to the value in money or money's worth of the stakes staked with the banker.
Yes.
And can one really say that a free chip has a value of has its face value in money or money's worth as a stake staked with the banker?
Well, we say stake staked with the stake staked is simply the act of putting the chip down on the table and having it accepted, and that's stake staked with the banker. The banker accepts it as a stake. So that's the meaning of those words.
Well, I suppose it comes down to this. When you have a circular transaction where the banker says, here, I'm going to give you a chip, you may play it in the next game, or this game, is that something which can contribute to bankers' profits within the meaning of subsection 10?
We say it does, and as I said, that may sound odd. As I said earlier, our starting point is to, as it were, to bank my learned friend's concession that a freely given cash chip
has got its face value. So a lot depends upon that concession in evaluation of information.
Yeah, of course. I mean, it follows, we say, from Aspinalls. Of course, Aspinalls is not binding here because it's a decision of the Court of Appeal. But we say it is a logical position for the Court of Appeal to have adopted, and precisely because, and to read back to the point, is that one's looking at a calculation of bankers' profits, not a calculation of real-world profits.
Well,
that one deduces from the language of the section.
Well, I suppose that begs
I mean,
the question about
as for money or money's worth, I mean, the only, as I said earlier, the only success that my diamond necklace example had with the Court of Appeal was that the Court of Appeal did accept that example threw some light on why in money's worth was included in.
Well, there is something moving there from the punter to the banker. There may be a misattribution of value to it, but there is something moving from one to the other, whereas in the case of the free chip, it's an entirely circular transaction.
Of the free chip?
Yes. And how can one say in that circumstance there is any value in money's worth actually being staked with the banker?
Well,
I suppose it comes back to the meaning.
Comes back to that, and of course, as I said earlier, the diamond necklace might in fact be completely valueless. It might be worth nothing. In which case, if one's thinking about this in terms of economic reality, the economic reality is then exactly the same as what your lordship describes as a circular transaction. But yes, I'm not sure I can take it much further.
No, thank you.
Fine. It's probably worth looking at some points made against us by my learned friends in their written case from paragraph 41 on, which is at page 76 of the bundle. And paragraph 41 is really the banker's profits merely identifies the profit to be taxed. But I think this is really a point we've explored in discussions with my Lord Kitchen. That's really the same point, and our answer to it is effectively the same. I mean, as to, they then say that stake is an ordinary word in the English language that refers to value put at risk. Well, the force of that point, of course, depends on their proposition that a non-neg has no value, which is a proposition we dispute. And disputing it, we then see no difficulty with talking about a non-neg being staked. If it is then lost, if the ball hits the zero, it is lost in the same way as any other stake is lost. And we therefore see no difficulty in calling it a stake. And 43, the point is made against us that there's a value in money or money's worth. We say our interpretation of that phrase is that it's the total of values to which items staked and risked are given in the game. So that's our interpretation of it. And in our respectful submission, it's not ambiguous, but it has a different meaning from that which my learned friends give it. That just is its meaning.
I mean, we come back to the same point. It's a very short point.
Indeed,
So
this
it helps
case is,
very much.
in the end, a very short point. That's one of the reasons that the papers in the case are relatively thin.
Well.
Yes. Indeed. I'm just, rather than repeat myself.
You don't get any help from anything other authorities.
No, there's no other authorities. We've looked at Lipkin. I'll come to another authority in a moment, relied on my moment friend, but nothing else. Then, I mean, my learned friends at 48, this is a point I said we might get different varieties of non-neg, because some may be returned as state, if the state wins, some are not returned, even if they win. We accept our approach doesn't distinguish between them, but then neither does my learned friend's approach distinguish between them, because they say all of them are worth nothing, and we say all of them are worth
the face value.
The face value. So we're not sure that point gets either of us very far. It's probably a recommendation of both approaches that they don't depend on fine distinctions of that kind, because we'd say it would be somewhat undesirable.
Well, they would depend.
They would.
It would depend upon these details if one were to go to some sort of open market valuation.
Yes, then it would. But that's an approach neither of us are actually supporting, but was the approach in the end adopted by the upper tribunal.
And when you say you're not supporting it,
We're not supporting
I
it precisely because
well, I understood it was your fallback case, is it not? Or you just say no?
it's
I had
it's
just so you
certainly
know.
not an approach we're supporting because we.
That's the word
But
that
essentially,
confuses
that
me.
way-
I mean, I understand your primary case is
Yeah.
its face value. Are you seeking to advance an alternative fallback case? I had thought that you were, but maybe I'm wrong.
It's not an approach we are supporting. It's certainly a logical possibility open to the court. It's one that persuaded the upper tribunal. As I said, it is an approach. It's an approach we don't like, and it's in policy terms, it creates a position of some confusion and difficulty because one ends up having to argue about what the exchange values of these things might be.
I mean, I follow all of that,
Yeah,
but I
yeah.
just want to know what your position is. If you're telling us it's a straight choice between nil value and face value, then I suppose we...
I suppose that
may put us in a
it's sort of
straitjacket, don't it?
like these votes in which one has to put preference 1, 2, 3. Am I just putting preference 1 and just leaving the rest open, or am I saying 1, 2, 3?
Yes.
I think I'm saying 1, 2, 3. If your lordship.
So you do have a fallback alternative argument?
But it's a very reluctant fallback because
All right.
we see it as a pretty undesirable approach.
And it means you lose this appeal.
I mean, it would certainly mean we lose this appeal. That's right. Although it would give us room to fight future cases. The case called Lydia's Horn that went up to the High Court that first-tier tribunal days that my learned friends rely on. I mention it briefly largely because my Lord Sales was acted for HMRC in it and may or may not have a memory of the case.
No. I recognised the name. I thought, well, I've seen that name somewhere before, and that was the...
Yes, one thing
Some
quite
of my
certainly I'm not
recollection.
sure I would remember cases I did 20 years ago. But we say that case really doesn't get anyone anywhere. The issue in that case, the fact of that case was that a casino had accepted a forged cheque. And there was a dispute between HMRC and the casino as to whether the cheque should be regarded as having been accepted conditionally or unconditionally. And the assumption that which both sides seem to have accepted was that dispute mattered because the question of whether the casino had actually received valid consideration for the chip that it had given mattered. Now we say that case was fought a long time ago I think in the late 1990s, and certainly about 10 to 15 years before Aspinall's. And we say that that assumption that both parties shared simply doesn't withstand Aspinall's, because once you accept that a cash chip that is given by the casino for no consideration at all counts as a stake value, it's somewhat hard to see why the question of whether there was consideration for the chips given actually mattered. Now, I'm afraid I can't throw any light over 20 years later on why HMRC at that stage accepted that in principle, that if no consideration were given for the chips, that the chips didn't count towards the stake. I simply can't explain that, but the short answer to any...
Probably bad legal advice. Probably bad legal advice.
I won't comment on that, but I can't throw any light on it. But the fundamental point is it simply doesn't matter because the reasoning in that case simply doesn't survive Aspinall's, and therefore the case doesn't get you anywhere. Now, in my final 20 minutes, I ought to just say something about the prize provisions in Section 20 of the Betting and Gaming Duties Act. I've taken your lordships already to the provisions of what is now Section 1110 capital A at page 300, which is the provision that directs us when thinking about how to value prizes, it directs us to Section 20 of the Betting and Gaming Duties Act 1981, which is at page 288 of the bundle. This legislation, you can see the provision it actually dates from 2003 if one looks at the notes rather than from the original 1981 version of the Act. The provision was brought into the world of gaming duty partly to deal with remote gaming duty, which was also, details of which needn't trouble your lordship, so it was created in 2007 at the same time as the changes were made to our ordinary gaming duty. And the concern that Section 20 is dealing with is bringing in sorts of prizes which are quite typical, I'm told, of online gaming, which often what is awarded is not just cash, but sometimes as an alternative to cash, something like a voucher giving a right to a holiday in Las Vegas as a typical sort of prize. And it was necessary to value those, and for consistency, these provisions were then brought in to ordinary gaming duty as well as remote gaming duty. And as explained earlier, the issue of consistency with the provisions of Section 1110A arises because both sides agree that if a non-neg is to have a particular value as a cash value, as a stake, it should also, at least normally, have that value when given as a prize. The two provisions should, although written very differently, match up and not produce systematically different results. Now then, looking at these provisions, the key subsections are subsections 3 and 4. And if one starts with subsection 4 tells you that there are circumstances in which a voucher shall be treated as having no value at all, so a nil value. And then there are two alternative possibilities that lead to a nil value conclusion. One is paragraph A and one is paragraph B. Paragraph A applies where the voucher does not satisfy subsection 3A and B. So it will have, i.e., it will have no value if neither 3A nor 3B apply to it. Now, our analysis is that, concentrating at the moment at paragraphs 4A and paragraph 3A, our analysis is that a voucher is a non-neg voucher is a voucher that may be used in place of money as a whole or partial payment for benefits of a specified kind obtained by a specified person, and that is because a non-neg may be used in place of a cash chip or money as a payment for benefits, namely the benefits in the game that are attributable to a cash chip or money of the same value as the face value of the non-neg. The non-neg has exactly the same benefits, being the chance of winning prizes, the same chances and the same amounts of winnings, if you're lucky, as a chip of exactly the same amount. So we say it falls within subsection 3A.
What are you're saying a chip is a voucher?
We're saying, yes, well, a non-voucher, a non-neg may be in the form of a chip, as you've seen, or it may be in the form of a voucher, but in either case what one gets, either directly through the chip or with the chip that one exchanges to the voucher, is instead of paying for that, either the chip or paying for the right to have a stake, one gets exactly the same benefits as one would derive from a cash chip for which one would normally have to pay money. So the use of the the use of if one thinks about the vouchers that one saw, that's a voucher that can be then used to purchase chips, non-neg chips, but those chips then have exactly the same benefits as one would get were one to pay money for a chip, because it's a chip that can be used for with a face value of whatever it is, and one gets exactly the same chances of winning and the same prizes if one does win. So we say it falls within subsection 3A, and therefore doesn't fall within subsection 4A. Now, my learned friend's case against us on that is, first of all, they say that staking a non-neg doesn't risk value, which is a point we reject for reasons we've already explained. They also say that a returned non-neg, a non-neg that you get back, is used in the same way as a non-neg given to the player by the casino. So a non-neg that one gets as a prize is used in the same way as a non-neg that's given to the player by the casino. And we say the fact that no payment is typically asked for a non-neg, because it's typically just given away as an incentive, doesn't remove the fact that the benefit it confers, the benefits equivalent to the benefits conferred by a cash chip of the same value paid in the game, are ones for which money would normally need to be paid. Normally, in order to get us to put a stake down on the gambling table with a chance of winning prizes, normally one needs money to do that. And insofar as a voucher is used to get benefits for which one normally needs money, then it falls within subsection 3A. Then we also have, given the way in which subsection 4 works, we also have to satisfy your lordships that the voucher shouldn't be treated as having no value under the provisions of subsection 4B, which is the specified restriction, condition, or limitation. What we say about that is that there is no specified restriction, condition, or limitation that makes the value of the voucher less than the amount mentioned in subsection 3B. There's nothing inherent about a non-neg that contains a restriction, condition, or limitation. It can only be used for betting, but then the vouchers that one typically gets, the voucher that you get for a holiday in Las Vegas can only be used for a holiday in Las Vegas. That is not a specified restriction, condition, or limitation. What we say the drafter had in mind in referring to those, in laying down those, this provision, is the situation that might sometimes arise. Take the holiday in Las Vegas. The holiday in Las Vegas might be subject to a restriction that you book it on the 29th of February. And in that situation, the restriction or conditional limitation one would see would significantly limit its value. If it said a holiday in Las Vegas worth £1,000, then the fact you could only book it on the 29th of February would be a restriction that would significantly limit. It would no longer be worth £1,000. Whereas if it had no restriction, condition, or limitation other than that you had to use it to buy a holiday in Las Vegas, that wouldn't.
Well, it might be if there happened to be a 29th of February in that year and that suited you, it would be worth £1,000 to you.
It might be. It may not be. That may not be an ideal example, but one can always think of restrictions, conditions, or limitations that effectively make it. I mean, if you had if one get something like that, just take an example rather close to the current case, and if you had a voucher that could only be used on the 29th of February, one could then see an argument that even though it had a face value of £100, it shouldn't be regarded as £100 because the restriction on its use was so substantial, because you'd have to remember to use it on the 29th of February, which is one day out of every 1,300 or so.
And I'm still sort of trying to get my head around the fact that we're talking here about bingo winnings,
Yes,
but you say nonetheless it comes into...
it does,
so-
and
right.
there is, like all these deeming provisions, there's something somewhat unsatisfactory, I have to say, about the way it works, but it is clear that is how it works.
Well, that's 10 big A.
It's 10...
Any necessary modifications?
Any necessary modifications, we're not sure that one does need to make necessary modifications, but we are told what section 1110 capital A tells us is we have to look at this.
Yes, and I think that's common ground, isn't
That
it?
is common ground, yes.
Oh, there it is.
And so we have to struggle with these provisions. What we say is it's perfectly possible, and we say right, to construe them in such a way as with the effect that neither part of subsection 4 applies. So none of the provisions that tell us that the voucher has to be treated as having no value apply, and then it is simply to be treated as having as a prize, as having a value equivalent to its face value, which achieves the result that we want, that the two sets of provisions mirror each
There's
other.
at the back of my mind a thought that the subject is to be taxed by clear words, and I'm not quite sure how clear the sort of all this is as applied to this situation. I mean, there comes a stage, doesn't there, in which one can't sort of struggle to make some sort of sense of these provisions to suit the revenue. They're not clear at the end of the day, the taxpayer wins.
Yeah, I mean, maybe all the three courts below looked at these provisions. They came up with different answers. The first tier tribunal answered the question that in the way that we are putting before your lordships, the upper tribunal and the Court of Appeal in a different way. Both of them managed to do it reasonably shortly, although reaching different results. So it's the mere fact that a provision can be read in different ways doesn't, of course, mean that it isn't reasonably clear.
And once you've said what it means, then it is clear.
Indeed, if once your lordship has told us what it means, it will become clear.
Okay.
Yes.
Anything else?
No, I think I'm going to have I'm going to be able to finish slightly earlier than forecast. Those are our submissions. For the reasons I've just outlined, we submit that the Betting and Gaming Duties Act of 81 provisions can be read so as to harmonise sensibly with the construction at section 1110A that we adopt. And in our submission, our construction provides for a simple and straightforward approach to the section's issue and avoids very fine and unprincipled distinctions between different types of incentive schemes used by casinos, and it's an approach preferable to the market value approach ultimately adopted by the upper tribunal, or what we respectfully say is the somewhat confused approach adopted by the Court of Appeal, and we invite this court to allow our appeal on that basis. I'm grateful.
Thank you very much indeed. Ms Wilson, do you want to add anything? Thank you. Mr. Hitchell.
Thank you, my lord. Well, as you've seen, the Court of Appeal and Upper Tribunal both recognised that gaming duty applies to the real-world value in money or money's worth risked by a player in a casino game, which, if lost to the bank, translates into a real-world receipt or profit for the casino operator. Requirements which they found weren't satisfied in circumstances where a player played a casino game using a non-neg chip or voucher. And we say that both the Court of Appeal and Upper Tribunal were right to do so, as that's the only outcome in this case that's consistent with the statutory framework, the ordinary meaning of the language used, and indeed existing authority in this area. And what I'd like to do, if I may, is look at those three matters in turn, starting with the statutory framework.
Can I mean, does
Yes,
the
please.
point raised by Lady Black,
Yeah.
are you able to help at all on the relationship of this with corporation tax?
Yeah. Insofar as the casino were to hand out a cash chip to a player, if it's a simple gift, that wouldn't qualify for a corporation tax deduction because it would be a business gift. There's a prohibition on deductions for business gifts. But if you had, say, a disgruntled player who'd been complaining about their treatment in the casino, and to pacify them, the casino were to say, well, here are a few cash chips, deduction would be possible in those circumstances. The other question that was posed, well, on what liability is corporation tax based? Is it based on the casino's profit net of gaming duty or gross? And the position is that corporation tax is paid on the net sum. So if the casino makes an overall profit of, say, 100, but it's then got a gaming duty liability of 50, because we've seen that the rate is 50%, it will then pay corporation tax on the remaining 50, subject to any other deductions or rent and staff costs and what have you.
That's what I'd have expected, yeah, thank you.
So that makes it sound as though the gaming duty does come in as an allowable expense
Yeah,
for
it
corporation
does.
tax.
Absolutely. It comes in first, so you'll pay your gaming duty,
Right.
and then whatever's left over, you pay corporation tax on, subject to regular deductions, so say rent, staff costs, the usual matters you'd expect.
Okay. That does seem to be different from what...
Well, that's the
Brett
position,
said. You understand.
my lord, as we understand it.
All right,
certainly,
okay.
The basis upon which London clubs has been paying corporation tax for many years without any difficulty with the revenue.
All right.
Well, no doubt we'll be told, of course,
Why
if
that's
there's anything
wrong.
wrong with that. In which case there'll be an upset in the market about it.
Yeah. Maybe a few casinos going out of business, if that's right. As I wanted to look at the three matters, statutory framework, language and authority in turn, starting with statutory framework. You've already been taken through that in some detail. The legislation is behind tab 4 in your authorities bundle. That's starting at memory stick page 295. I don't propose to take you back to it unless you feel the need, because you've looked at it already. But summarising what the legislation says, you've seen from section 11(1)(2) of the Finance Act 97 that gaming duty applies to the gross gaming yield from premises upon which dutiable gaming takes place. Section 11(8), that's memory stick page 299, then tells us that the gross gaming yield is made up of two components: gaming receipts from the premises, and in circumstances where the provider of the premises is banker, the banker's profits from the gaming taking place on the premises.
And for our benefit, gaming,
Yes, gaming receipts then are defined, not relevant in this case, but defined in sub 9.
yeah,
That's memory stick page 399. At the foot of the page.
So what sort of things are there?
It would be charges made in order to game. I mean, a good example would be if you want to play poker, you often have to pay some sort of participation fee.
Yeah, I see. So they're not, they're distinguished from the stakes
Yeah.
in the game itself.
Yeah. So that's why I say we're not concerned with them. But the relevance of this dual approach to the definition of gross gaming yield, gaming receipts and banker's profit, is these words receipt and profit are both well-recognised commercial concepts. So the charged duty is based on the aggregate of two well-recognised commercial concepts. Now, we've seen that the expression bank...
Say, I mean, what, I'm sorry, I mean,
Yeah.
we take that from you, do we, or is there some?
I think, well, actually, you take it from me, you can also take it from the Court of Appeal. We'll look at what Lady Justice Gloucester had to say later, but certainly that was her approach, that, look, we all know what, that receipt and profit are ordinary commercial concepts, but we'll look at what she had to say.
But I mean, just on that, I mean, profit usually brings in a whole host of other expenses of the commercial operation, whereas here, section 1110 seems to be deliberately specifying the plus element and the minus element,
We'll
not
look
bringing
at the definition
in...
of profit. There is a specific statutory definition, as you
Right.
say, which you find in many contexts. In corporation tax we were talking about before, the scheme of the legislation tells you what you can and can't deduct or what you must include in order to arrive at profit. But that doesn't detract from the force of the point that profit is generally understood as a commercial concept. But here, you're quite right, my lord, that we've seen that banker's profit is defined in subsection 10 as the difference between the value in money or money's worth of stakes staked with the banker, minus, following amendment by the Finance Act 2007, the value of prizes provided. And the use of the phrase stakes staked in lim A of that definition confirms to us that the value to be included in the calculation of banker's profit is the value put at risk by the player in the game. And we say that because that is a conclusion which follows from the ordinary meaning of the word stake, and there is no contrary indication in the statutory code.
But at what stage do you assess whether or not something is put at risk?
I will.
I mean, that may be key.
Yeah, absolutely, my lord, and I will, of course, come to that. You just bear with me for the minute. Now, just this idea that a stake is something put at risk. Say it follows from the ordinary meaning of the word, and just for completeness, we've included in the authorities bundle the Oxford English Dictionary definition. I don't propose to take you to it, but it's at memory stick page 412. It talks about that which is placed at hazard. But we also see from the legislation, from that lim A of the definition of banker's profit, that the value to be included is the value of the stake staked. So in other words, the value put at risk in the game, but then in money or money's worth. And these are important words because, as the upper tribunal recognised, the requirement that the stake must have a value in money or money's worth is not only another indication that the duty applies to some real-world value, but it also confirms that the value we're concerned with is a value in money itself or something which might be converted into money. And one of the key difficulties with the Crown's case is that they focus on that word value in the definition of banker's profit, but without paying any regard whatsoever to the words in money or money's worth. The value we're concerned with must be value in money or money's worth, which is value in money or in something that might be converted into money. And this was a point that the upper tribunal recognised. Can I just please take you to two short passages in the upper tribunal's decision? It's in the core volume. The first passage is paragraph 27, memory stick page 128. It's core volume appendix part 1, tab 5. Para 27 is towards the foot of the page, if you've all got that. But you see, the upper tribunal says, in our view, the argument that the value of a non-neg must be equal to the face value of the stake pays insufficient regard to the requirement that the value is in money or money's worth. That expression is one that's commonly used to mean either a value in money or in something else that may be converted into money. Now, didn't read on in 27, but can I just also take you to a short passage in 28 over the page? That's memory stick 129. Picking up at line 8 there's a sentence beginning, the ascertainment of value.
By which paragraph?
So this is paragraph 28, my lord.
Thank you.
Memory stick 129. And line 8 there's a sentence beginning, the ascertainment of value in money or money's worth must have regard to the economic substance underlying the stake and cannot be represented by the nominal or face value of the stake, other than where the face value reflects, as it did in Aspinall's, that we'll come to, the economic substance of the amount risked in the game. Now, applying that to the use of a non-neg, the non-neg is neither a stake staked, as the Court of Appeal found, nor does it have a value as a stake in money or money's worth, unless the non-neg can either be encashed or assigned, which we say it can't. And I intend to develop that submission a bit later on, if I may, when I respond to the revenues case and what they term the encashment and market value approaches to the valuation of stakes, something that my learned friend spent quite some time on this morning. But I'd just like to explain at the outset why it follows that absent the ability to encash or assign, the use of a non-neg doesn't even involve the staking of a stake, even though the non-neg might be said to confer on the holder the valuable right of being able to gamble for free. This is the value that Mr. Peretz placed much reliance on. And the reason we say that this value is relevant unless it's capable of assignment is that the mere exercise of a valuable right, which cannot otherwise be encashed or assigned, cannot involve putting the value of that right at risk in the game, which is a prerequisite of a stake.
But what, you can compel the banker to accept it at face value.
Right. What would compel the banker to accept it is the contract entered into, and we'll come to the contractual analysis in a moment, but it's the contract that it's entered into between banker and player.
And so,
Beg your pardon,
what
my lady.
difference does that make?
Well, the contract is relevant for ascribing value
Yes.
to the stake,
Yeah.
which is a conclusion that the Court of Appeal in Aspinall's, in a passage you haven't looked at yet, was consistent with an objective approach to the ascertainment of value.
We're looking at this all the time from the point of view of the customer.
Yes.
What this section says is stakes staked with the banker. Why aren't we looking at it from the point of view of the banker? If you stake something, you stand to lose it. If you lose it, is it money or money's worth to the banker?
Yeah. This is why I said right at the beginning, what we're looking at here is the real value, the real economic value that the player stands to lose and the banker stands to win. Because you're quite right. It talks about with the banker, and we're looking to ascertain the banker's profit here. But when the legislation talks about value in money or money's worth of stake staked with the banker, stake staked presupposes something being put at risk. And the value we're concerned with, the words money or money's worth, tell us that the value we're concerned with is either money itself or something that might be converted into money.
And moving from the punter to the banker.
Yes.
So it must have the same character on both sides of that
Yeah,
equation.
oh, yes, absolutely.
So if it's not money or money's worth for the banker,
Yeah.
then it
it's-
isn't money or money's worth for the purpose of the section.
Absolutely, but there will be parity. There will be parity. And I noticed that Lord Kitchen's looking confused at me. Maybe you've got in mind your example you put before about the free chip, the free cash chip, and how that fits into all this. So let me deal with that, because it causes no difficulty at all. The cash chip, as we know, and indeed as will be confirmed by authority, say a £100 cash chip is no different to £100 in cash. So the player is given effectively £100 in cash by the casino. Now, at that point, the player can say, what am I going to do with this? I can go and have a meal in the restaurant, cash it in and go home. Or I could choose to gamble with it. And we're obviously concerned with the transaction, the contract that comes into being if the player decides to gamble with that chip. And we're saying when the player decides to gamble with that £100 cash chip, are they risking value in money or money's worth with the banker? And the answer is yes. They're clearly putting something at risk. It's £100. Does that have a value in money? Well, it is money. It's tantamount to money. And is that money that if the player loses, the banker stands to win? Yes, well, the banker, as banker, wins in a very real sense £100. So this is why there's no difficulty reconciling the approach that we urge upon you, and indeed the one adopted by the Court of Appeal and Upper Tribunal, with the, what was said, the concession I made in relation to the free chip.
So you say Aspinall was correctly decided.
We'll come to Aspinall's, but Aspinall's is entirely consistent with my case. But I repeat the point, absent the ability to encash or assign, the mere exercise of the right attaching to the non-neg might be a valuable right, but I'm not risking that right, simply exercising it. And you see this illustrated most plainly if we look at the, say, the one-hit voucher. This is the voucher that I can use to play, but I surrender it come what may, irrespective of the outcome of the bet. It's a nonsense to say I'm putting value at risk when I play with such a voucher. The voucher confers a valuable right. I don't depart from that. But it's not value that I'm risking.
Why not? Why isn't it value that you're risking in just the same way
Because I'm going to lose
as
it
a free chip is?
I'm going to lose it anyway. I can't do anything with it other than use it to place a bet. I'm exercising a right that I have.
But exercising the right and putting something to risk are not mutually exclusive concepts.
Well, I put it to you, my lady, that they are mutually exclusive concepts. How can I be risking something that I'm going to lose, I have to give up anyway?
Well, that's it, only if you choose to exercise the right.
All right. I choose to exercise the right, but unless I can encash or assign, this bit of paper, bit of plastic, it can have no other value. And that's why I say the approach and conclusions on encashment value and what the revenue call market value, they're important, and we need to go on to look at them. Because, of course, if I could assign for value, if I could sell this thing, then, of course, I've chosen to risk that inherent value by using the voucher as a stake rather than selling it on eBay.
Well, you have it as a contingent asset if you change your mind about using it.
Yeah. What we're looking to do is value that asset in money or money's worth.
Yeah, but it must have a value. The chance you may want to use it and win.
Well, I may exercise that right, but
Yes.
then am I really risking that right when I exercise it?
Well, that's the same point.
Other than, it's the same.
It's a similar.
And we say the non-neg is in reality something that is used instead of a stake. To put it in a slightly different way, the focus of the gaming duty legislation is not on the value of the right to play a game, it's on the value in money or money's worth put at risk in the game. And the result otherwise is to expose the casino operator to a charged duty on a wholly fictitious banker's profit whenever a non-neg is lost to or otherwise retained by the House. And that, as Lady Justice Gloucester recognised, that was an outcome flatly inconsistent with both the natural meaning and purpose of the gaming duty legislation. Can I take you, please, to just one paragraph in her judgment? This is Memory Stick, page 105, Authorities, Appendix, Part 1, Tab 2, page 16 of the report.
I beg your pardon, which paragraph?
It's paragraph 29 of her ladyship's judgment, with which the other members of the court agreed. And what she says there is, the first critical point is that the relevant words have to be construed in their real-world practical context, not in the artificial world of possible or philosophical interpretations of the words value or money's worth. What has to be ascertained for the purposes of working out the amount of gaming duty under Section 11 is the gross gaming yield from any premises, which consists of 1, the gaming receipts from those premises for the relevant period, i.e. in respect of charges made in connection with gaming in the premises, and 2, the banker's profits for that period in respect of dutiable gaming taking place on the premises. In the context of Section 11.8, therefore, one is looking to ascertain a real-world gross gaming yield, whether comprising receipts from charges made by the casino or bankers' profits. Likewise, in the context of Section 1110, agreed to be the relevant subsection here, the purpose of the provision as a whole is clearly to charge duty on the profits of the casino in its role as banker. Profits are measured by the difference between the value in money or money's worth of the stake staked with the banker in any such gaming, that's 1110A, and the value in money or money's worth of the, I think there's the word winnings missing there, paid by the banker to those taking part in such gaming otherwise than on behalf of a provider of premises. And I say winnings because she's actually trotting out the old version of the legislation here, which also includes the money or money's worth. The calculation of stake staked under Section 1110, I think that must be A, to my mind, in context, involves a conventional arithmetical calculation of real-world stakes received from the players, which, if necessary, could feature as an actual receipt of revenue, actual receipt or revenue in a set of accounts. It does not, on any natural meaning, include artificial or notional values placed on tokens given to the player by the casino as part of a promotional or marketing exercise, which intrinsically have no value and are non-negotiable, or at best have an economic value to the player, equivalent to their face value multiplied by the chance of winning. And I needn't read on. But although Lady Justice Gloucester refers at the end there to economic value to the player represented by the chance of winning, I've already explained to you why value of that sort is irrelevant to the computation of bankers' profit unless that value is capable of encashment or assignment. Moreover, an approach to the legislation under which gaming duty is applied to the economic substance of the stake in money or money's worth is also consistent with the reality of ordinary casino gaming, as Lord Gough explained in his judgment in Lipkin Gorman. So I'm moving on to authority, and I'd like to go next to Lipkin Gorman, if I may, which is memory stick page 339. That's authorities tab 9. But I'd like to pick up, if I may, at page 575 of the law report. So that's memory stick page 366. And this is in the section of Lord Gough's judgment where he considers whether the defendant club had given valuable consideration to the thief Cass when it allowed him to exchange money stolen from the firm's client account for chips and then to gamble with those chips in the club. And he says, it's between letters F and G, in common sense terms, those who gambled at the club were not gambling for chips, they were gambling for money. As Lord Justice Davis said in CHT and Ward, people don't game in order to win chips, they game in order to win money. The chips are not money or money's worth. They are mere counters or symbols used for the convenience of all concerned in the gaming. The convenience is manifest, especially from the point of view of the club. The club has the gambler's money up front, and large sums of cash are not floating around at the gaming tables. The chips are simply a convenient mechanism for facilitating gambling with money. The property in the chips as such remains in the club, so that there is no question of a gambler buying the chips from the club when he obtains them for cash. So just pausing there, as Lord Gough recognises, a gambler attends a casino to gamble for money, and the chips that he or she uses are no more than a convenient mechanism for gambling with money. The chips themselves are inherently worthless. But what they do critically is they represent money already deposited by the gambler with the casino. And when the gambler stakes a chip in a game, what they're actually doing is staking that money itself. And it's our case that that same approach should be adopted for the purpose of applying the charge to gaming duty. The legislation indeed supports such an approach. When we apply the charge to gaming duty, the gaming duty legislation, we don't apply it to the chip itself or notional value of the chip. We apply it to the actual value, the actual amount in money or money's worth being risked by the gambler as a stake in the game. Now, in his judgment in Lipkin Gorman, Lord Gough then goes on to subject the exchange of cash for chips and then the use of those chips to gamble to a closer legal analysis. And I want to take you to this, and the reason I do is because it's relevant to the reliance placed by the revenue on what they call the rules of the game as a means of identifying a stake and determining its value. Now, Lord Gough bases his analysis on a department store which he says, for reasons of security, insists that goods are paid for in chips rather than cash. It's a relatively long extract. It goes from the top of page 576, that's MS 367, down to letter C on page 577, that's MS 368. As such, can I please just ask you to read that to yourself, then I'll make a few submissions on
Right,
it.
you want to sit down while we're doing this?
Just before we do so,
sorry.
what are we looking for in it?
Right. What Lord Gough sets out here is a contractual analysis to the identification and valuation of a chip used as a payment in a department store transaction.
Right.
And what I want to then go on to do after you've read this is to apply that same logic, which I say is impeccable, apply that same logic to a casino transaction, first of all looking at the use of a cash chip, and then comparing and contrasting that with the use of a non-neg, because the two are very different. So that's why I'm taking you to this.
So how far do you want us to read?
Yeah, I want you to read over to page 577, the paragraph ending, at letter C.
Thank you.
How are we doing?
Yes.
Right, thank you.
Thank you, my lord. Well, you'll note that Lord Gough explains that if gaming contracts were not void under English law, then exactly the same result would follow as in his shop example. And the first point to note is that gaming contracts, of course, are no longer void under English law. Section 18 of the Gaming Act 1845 was repealed by Section 334 of the Gambling Act 2005. And then Section 335 of that Act, in terms, makes gambling contracts enforceable. Just for completeness, we've included that legislation in the authorities bundle at MS 290 and 291. So applying Lord Gough's analysis to a casino rather than a department store, first of all, in the case of a player using ordinary cash chips, the player will exchange cash at the cash desk at the cage for those chips. And as a result, a contract's made under which the casino agrees that if bets are placed by the player, the casino will accept chips to the equivalent value of the stake. Then, every time the player places a bet, he or she enters into a second contract with the casino, a gaming contract, under which the player stakes not the chip, but money. And that's because, as Lord Gough explains, when the customer tenders a chip as a stake, the casino appropriates part of the money that's been deposited with it towards the bet. The chip itself is no more than a mechanism by which the player is able to place a money stake without any cash being handed over at the gaming table. And it follows in that straightforward example that the stake is the actual cash that the player's risking in the game when he presents the chip to the banker, the actual cash that's been deposited at the cage. But the analysis in relation to the use of a non-neg is completely different. The casino agrees that the player might play a game without the need to first deposit value with it, and without the need to put any value at risk in the game. The odds are instead applied to a notional value. And it follows that when the player surrenders the non-neg at the table, there is no appropriation of money or money's worth towards a stake. And as a result, the non-neg is not simply a mechanism for gambling with money, indeed money's worth, without the need for cash or other value to be handed over at the table.
And that depends on your submission that you can't assign it, or...
I'll come to assignability. I accept that, yeah. You're right to pull me up there. I accept that if this thing's capable of encashment or assignment, then of course value is being risked. I of course accept that. But the non-neg, it affords the player the ability to play a casino game on fundamentally different terms. And the non-neg player also has fundamentally different rights under that gaming contract in the case of a winning outcome. The prize paid to a player gambling with a cash chip will include the return of the cash chip staked, which of course is the equivalent to winning cash itself. Whereas the player presenting a non-neg will at best merely be entitled to the return of his or her non-neg, the use of which of course is limited to gaming. And I say at best because I've already mentioned one-hit and cash match vouchers, which are surrendered to the house irrespective of the outcome of the particular game. Which brings me to the Commission's case.
Is that going to be a convenient point?
I was just looking at my watch, my lord. That may be a convenient moment. Thank you.
You're pretty well on time.
Oh yeah, we're galloping through it.
Don't over-gallop, but thank you very much. We'll meet again at 2:00.
Thank you.